Whew, 300 subscribers, man. Thank you guys so much. I, Abdul Karoma, Next Wave Trader, on behalf of Next Wave, I appreciate it. We appreciate you guys so much for helping us get to our 300 subscriber goal. We set this goal in July and we said once we hit 300 subscribers, we're going to be providing quality trade ideas. And so we are going to back that promise up. You guys are going to see what real fire trade ideas look like. But with that being said, you guys have to watch this video first. You guys have to make sure to watch this video till the end so that you understand all the things that you need to understand to take next wave trade ideas, because this isn't financial advice, but these are trades that can help you with your trade bias. This can help you see things that in the market you might not have seen, and you'll be like, I wonder why these guys are looking for a buy here or a sell here. But with that being said, go ahead, sit back, take notes, save this video. Make sure to subscribe to our YouTube channel. Follow us on our Telegram channel if you haven't already, so that you can be able to get access to these trade ideas. The link is going to be in the bio, and let's go ahead and get started, guys.
All right, guys, let's go ahead and get started. So let's go ahead and get started with the next wave trade ideas. I know that you guys want profits like how you guys are seeing over here. I know you guys want to see these stuff like this. This is things that we have on a weekly, monthly basis where we have profits like this, where we have trades like this, and we use this with low risk and getting high rewards. That is how we do it: low risk, high rewards. And so I'm gonna go ahead and break some things down. So in this video, what we're gonna be breaking down is some common terms used that we use when with our trade ideas, examples of some of these trade ideas that you will be seeing, good risk management practices, because we cannot stress enough risk management is an important aspect of trading, probably one of the most important aspects of trading, and a little bit more. So let's go ahead and get straight into it. Common terms used. So stop loss. Stop loss, probably the most important order out of all of these orders, other than you getting into a trade, right? It's the order set on a trade to close out the trade when a certain price that you set has been breached. So this is used to protect your capital and prevent future losses, close your trade at break even, or close your trade in profit. One of the most important things and one of the most important skills that traders need to learn first is how not to lose money. Not to how to make money. It's not how to lose money. That is one of the most important things that you as a trader should be knowing how to do. And so that's why stop loss is important, because the stop loss is going to prevent you from incurring any more additional losses, right? So let's go ahead. Take profit. Take profit is the order set on a trade to close the full trade / position in profit. Now, this is probably what everybody loves to see, right? And again, the take profit is important because you don't want to not have a take profit, or you don't want to have a target that you're reaching. You always want to have a take profit. So, and usually with the trade ideas that we send, sometimes there's going to be one take profit. Sometimes there might be two take profits where you take partial profits, which I will explain, or there might be up to even 6 to 7 take profits. So we'll be, and like I said, as we go on, we'll be able to determine what those look like. Partial profits, taking partials, that's when you manually take a certain percentage of your profits from an active trade / position. Now, for those who have been following us for a while, you guys know that I use a tool called the Magic Keys, which if you want to use this, I'll put the description I'll put the link in the description so that you guys can be able to get access to this. I think that it's one of the most perfect risk management tools in the world, and I use this for trades that we take for our Next Wave accounts and my personal accounts as well, for me to be able to take partial profits while I am away from my computer or while I am not on my phone. But that is what partial profits are. You know, you'll take a certain percentage or a certain portion of your trade so that you can make sure that you secure profits. You know, we strongly advise that you don't want to, you know, leave if you're in a profitable trade and it's gone a good amount. Make sure that you want to make sure that you like present yourself, or like give yourself a present or a pat on the back saying, hey, I've made this much amount of money on this market, I mean on this trade, and now it's risk free type of thing, you know. So let's go ahead and continue though. So entry, you know, that's just the price where you enter the trade at. And then we have risk to reward ratio. This is the amount that you risk versus the expected return of a trade. So you're going to be hearing a lot of 1-to-1 risk to reward has been hit. When we say that 1-to-1 risk to reward has been hit, that means that whatever you are risking, you've made that amount. So if you were risking, like, let's say hypothetically $200 on a trade, and then price has gone the exact same amount of pips, because that's what it calculated, right? That pips or points price is gone the same amount that you were risking. Now you have made the exact same amount that you have risked in the market. That is a 1-to-1 risk to reward ratio. Whereas you have a 1-to-2 risk to reward ratio, that means that whatever you risked, you have made double that amount, you know. And we'll talk more about risk to reward ratio in a little bit. But let me go ahead and continue. And if you guys are getting some value, please go ahead and press that subscribe button, and please give us a thumbs up. You know, we do want to be able to be on the algorithm so that YouTube can be able to provide videos like this to a whole lot of traders, because we are trying to be the change that we want to see in the trading community. All right, so this is an example on Telegram of what you'll be seeing whenever we send out a trade. You're going to have it's going to be a sell limit, and we'll talk about the different type of order that you'll be seeing. But this is just an example, right, where we have a sell limit on Euro USD, and we have the coordinates of all the entry, the stop loss, and the take profits, the total risk to reward. This is an example of what you will be seeing once you are on the Telegram channel, and you'll be able to take these trades, right? And this is what that might look like on the chart. You know, this is an example of a short trade idea. You see where we have the stop loss, it's in red. We have the entry that's in white. The take profit levels, they're all in dark blue. And then the final take profit is in light blue or light green, whatever you think that color is, you know. And of course, where you see the pair Euro USD, that's where current price is at, right? So that means that price hasn't necessarily gotten to that level yet. Now, just because the stop loss is red, the entry line is white, the take profit lines are all dark blue, and the final take profit is light blue, that doesn't mean that it's going to be these colors every single time. You know, these are just colors for this pair, or this not this pair, this color scheme on my chart that it just fits for me. But there's going to be other color schemes that, you know, Peyton might use, or I might use a different chart scheme and use different colors. But 9 times out of 10, that stop loss is always going to be red, you know, and we'll make sure that that entry is visible and is a completely different color than any of the other things that we use. And of course, if you guys want to be able to get a chart of this and all the other charts that I will be using, go ahead and just look in the description, and you'll be able to get a link of all these charts so you guys can use it for future reference. All right, now this is what that trade would have looked like if somebody would have taken it, right? If somebody would say, okay, they have a sell limit that they're setting, I'm going to go ahead and plug that into my phone or into my MT4, my MetaTrader 5, my C terminal, whatever you trade on, or C Trader, sorry. And this would have been what the outcome looked like. You know, each one of these lines is a 1-to-1. So the first take profit is 1-to-1. The second take profit is 1-to-2. Third take profit is 1-to-3. Fourth take profit is 1-to-4. 5, 1-to-6. I mean, this is a 1-to-5 right here. This is 1-to-6, and the final take profit is usually a 1-to-6.5. You know, that's if you see 7 take profits. Usually the trades that have 7 take profits, that means that the total risk to reward is a 1 to 6.5, meaning that you'll be making 6.5 times more than what you were risking. All right, here's another example where we have a buy on Euro USD. Now, this is a market execution buy, and it's a different look, but we will be making sure to try to color code it so that you could be able to say that, okay, this is a buy, for green will be for buy, and then red will be for sell. I don't necessarily want you to attach those two colors to that, but it's just so that you can be able to pay attention to it, because there is psychology behind colors. And so you see the entry, the stop loss, and the take profits. And we can see here that there's only 2 take profits. When we go on to the chart, then you can be able to see exactly why that is. We may or may not provide charts for you, but we will always make sure that we give the coordinates, because that is what is important. So this is an example of the long trade. We have the entry, we have the stop loss, the take profit, only 1 take profit that's in the dark blue. And then we have the final take profit, which is in the light blue. This means that since there's only 2 take profits, that there's only going to be a 1-to-1 and a 1-to-2 take profit on this. So when we go on and see that price is gone and hit that 1-to-2, the final take profit, and this is as we go along, you guys will see when we will be saying, oh, when are we moving our stop loss to break even, or are we ever going to remove our stop loss? You guys will see as we go along how we would be saying that this is what you should be doing, right? So let's take a look at now the different market orders that you will be expecting when you take our trades. So we have buy and sell stop orders. This is probably the least likely one that we will be using, but it is a pending order that waits for current price to cross either above or below a certain price before it activates a buy or sell, respectively. We have buy and sell limit orders. This is what you're going to be seeing the most. And this is a pending order that waits for price to be below the current price for buys or above current price for sells, and will only activate once price reaches said price. And we have the market execution buy or sell. And this is an order that places you into the market at the best current price. Now, there is much more that this involves, but I'm not going to go too deep into that. If you want more information on that, then maybe you should take a look at our mentorship program that we do offer, or you can go ahead and take a look at taking a look at one of our courses that we provide. Link will be in the bio. And now we have risk management. Guys, please, before I even talk about this, I'm gonna stop sharing, and I want you guys to really look at me when I say this. I please want you guys to use risk management when you guys are using or utilizing our trade ideas. And the reason why I'm pleading to you guys is because I don't want somebody to go and risk $5,000 on a single one of our trades when you only have $6,000 in your trading account. If you have $1 million account and then you go and risk $5,000, I'm not gonna lose sleep at night, because you took a percent. That is great risk management, in my personal opinion. But then when you're losing 95% of your account, or 50% of your account, or even 10% of your account on one of my trades, it's not going to make me as a trader who wants to provide good quality and want to really change the dynamics of the trading community. It's not going to make me feel good that, hey, because you decided to go and over leverage or not use proper risk management, that you ended up losing that much money. And now you psychologically, or maybe, that might be your bill money that you have to go and pay for rent or something like that. Or that might be some money that you need. Please use proper risk management if and when you are taking our trades. Again, this is not financial advice, but we just want to make sure that you guys are being able to really utilize and capitalize off of the ideas that we're giving to you guys, right? So Let's go ahead and get started. I'm going to go ahead and share my background again. Okay, so risk management. Let's get back to it. Okay, so always use a stop loss. If you take our trades and you don't use a stop loss, if a trade goes the wrong way and it keeps dropping, it keeps going the wrong way, then that is going to be something that is up to you, right? Usually, when our trades hit stop loss, they end up turning around and going to hit our take profits right after. And that's just something that we deal with because that is how our strategy is. But always use a stop loss. Risk 1 to 2% per trade maximum. If you have a $10,000 account, risk 1% of that account, which is $100. Do not go and be risking 10, 15, 20% on one trade. We do know that we are the GOATs. We do know that we get fire trades, but that doesn't mean that we are like we're not gonna take a loss every once in a while. Losses occur, and if I don't know about you guys, but I don't know any professional trader who's 100% like win rate. You know what I mean? So always risk 1 to 2%, even 3% maximum is okay, but that's where I draw the line completely at 3%. After 1-to-1 risk to reward, which is TP1, that's always going to be TP1, has been reached, move your stop loss to break even and leave it there. If you want, you can go ahead and leave the stop loss at wherever we tell you to put the stop loss at. But, and this is just the psychology, the way how I look at it. If I went and risked $500 and then I went and made $500 and then the trade turns around on me and then hits my stop loss, that means I went and lost a total of $1,000 because I lost the $500 that I was already risking to begin with, and then I lost the other $500 that I already had in gross profit. Does that make sense? Or an unrealized profit. So that's why I say that after 1-to-1, move your stop loss to break even, take your full profits, move your stop loss to like 1 or 2 pips in profit, or go ahead and take partial profits. Or I think I already said take partial profits, but or move your stop loss like even a little higher than 1 to 2 pips. Put it as a trailing stop, but make sure that you don't if you make money in the market, don't go and give it up. Don't go and lose the money. If you go and make $1,000 and you are risking $1,000, move your stop loss to break even. I sometimes say, even if you like in the same exact scenario, even if you make $800 and you were risking $1,000, you made 80% of what you were risking. That's a good amount of money. You know what I'm saying? Off of one single trade. There are going to be a lot of trade ideas that you guys see from us. So that is why we want to give you guys these tools so that you guys can be profitable real life, because we want to be able to see profitable traders from our trade ideas, because that's something that we don't see often in this industry. So before I even continue with this, I want to show you guys how to be able to be like, oh, well, what lot size should I use for a trade or anything like that, So let's go ahead and type in your USD, and this website that I'm using is called cashbackforex.com. What you'll do is you'll come to this website, and I'm not affiliated to this company by any ways necessary. I just like the product that they use. I just like the product that they use. I'll give you a link to the website so that you can use it. I'm not affiliated. We are not affiliated to this company in any way, shape, or form, but we do love the tools that they have. So what you're going to do is come to the position size and risk calculator. And what you're going to do is whatever instrument that we're going to call, whether if it's Bitcoin, gold, US 30, whatever it is, you're going to go ahead and come to that instrument, your USD. You're going to put what how many stop loss it is. You are going to have to figure out how many pips that is. We maybe we'll decide to add how many pips that is, but we're not responsible for that, realistically speaking, because we don't count pips. We don't count pips or points over here. But you're gonna figure out how many pips you're gonna be risking. You know what? Maybe just because of this sake, just for this sake, I'll go ahead and throw. We'll go ahead and throw how many pips it is for the stop loss. All right. So you're gonna go ahead and type in how many pips it is. You're gonna put your account balance. So let's just say, hypothetically speaking, that you are trading on a $5,000 account, right? I haven't traded on a small account like that in a while. And let's say you are wanting to risk a percentage, because you want to be risking percentage. You don't want to risk dollars. You want to be able to calculate and do everything in percentage, because then that's when you're going to be able to play with big money in the future. So let's say that you want to risk 1% on this trade, 65 pips, and the contract size is 100,000 for a forex pairs. Contract size always 100,000. Calculate it. It's going to go and tell you the lot size that you're going to use, which is a 0.07, and it's going to tell you the money that you're risking, $50. I love this this website in particular, because it even tells you how much you're going to risk on a Bitcoin trade. So you have Bitcoin USD right here, for example, right? And the opening price is 16,495, and let's see what the stop loss price is. Let's just go ahead and say 1,700, right? Let's just go ahead and say 1,700 or 17,000, just for SNL, right? Account balance $5,000. We're going to use 1%. Calculate lot size in MT4/MT5. Yep, contract size. You go and figure out on your broker how do you find out what the contract size is. So what you're going to do on MT4 or on MT5 is you're going to go onto your terminal. I don't know if you guys can see this well. No, you guys can't. I think it's because my light's too bright. Let me turn it down a little bit. Okay, so maybe you guys can't. Sorry. All right, it is what it is. But you're gonna go onto your terminal, right? And you're gonna go and click on one of these on any one of these pairs, or I would say go onto Bitcoin itself, right? And you're gonna click on symbol properties. I'm in a Bitcoin trade right now, but you're gonna go onto symbol properties, and it's gonna tell you 1, 2, 3, 4 lines down the contract size. So for this broker that I'm using, which is FTMO, but the contract size for Bitcoin is 1. So the contract size right there, calculate it. It's going to tell me what lot size to use, and that's the 0.09 lot size, and I'm going to be risking $50. Now let's say if the contract size was 100, let's see what the difference would be. It wouldn't even let me trade it, because it's telling me to trade at a 0.000991. You know what I mean? So it wouldn't even allow you to trade this. Same thing with all the other pairs. All you need to do is know the contract size and make sure to put the risk percent. Even if you want to risk 2%, that's all up to you. But do not over leverage, guys. Again, do not over leverage. We teach our students how to be able to figure out the risk, when to lower the risk, when to up the risk, and stuff like that. If I were you, if you're going to risk 1%, risk 1% on all our trades. If you're going to risk 2%, risk 2% on all our trades. If you're going to risk 0.5% on our trades, risk 0.5% on all our trades. This is not financial advice, but do use risk management. Let me put my light back up. Okay. So now that's the big just calculator, right? So now let's take a look at the importance of why I say risk 1% per trade, right? So let's just say that you're starting your trading account with $1,000. And if you guys have made it all the way over here, please don't forget to hit the subscribe button and press a like. So yeah, you're starting with $1,000, and then you have minus 1%. Let's just say that we took one trade and it's a loss. That minus 1%, you still have $990. Then we lose another trade. Let's say that we're just like, for some reason, we're in a losing streak, and then we lose 2 trades in a row or 3 trades in a row. When we lose 3 trades in a row, you still have $970 in your account. So you can still trade another day and you don't even have to stress about it. Now if you go to 5 trades in a row, just straight up loss after loss after loss. But guess what? You still have $950 in your account. So you're only down minus 5%. And you still have a whole lot of money to still trade. You see why it's really important to trade with the percentages, and we're going to keep going so you guys could even understand a little further why it's important, right? So now we have 5% per trade right here, and you're starting with $1,000. Same thing, you just upped your risk to 5%. When you lose one trade, you've already lost $950. That's how much you would have lost same thing right here off the bat, just off of one trade. What happens if we go on a losing streak? Because we are not perfect. We know that we will end up having a losing streak every now and then again. It happens every once in a while. It doesn't happen often, but it happens every once in a while. And we know that it's very much possible for it to happen at any time, right? So let's say now we go into a 3 trade losing streak. Now you're down $857. It's not terrible, but you're still down 15% you're still down 15%. And then if you go on a 5 trade losing streak, now you're down 25%, and now you only have $773. You still have a good amount of money to trade with, but your account size is drastically down compared to this. Now, of course, the flip side of this is if we go on a winning streak, which happens quite often, happens a lot, then you're going to be profitable. But still, you have to understand that risk management is important. All right, now we have 10% per trade, starting with $1,000. I'm just going to get straight to it, guys. If we go on a 5 trade losing streak and you're risking 10% per trade, you're going to be at $590.49 after just 5 trades. Now, on the flip side of it, if you're winning, it's going to be good. But again, losing streaks do happen. Now, let's take a look at some positive stuff. Let's take a look at some good numbers now. And let me put this back on full screen. So this is a chart of what it looks like on average if you are a trader if you are a trader who trades on a 1-to-1 risk to reward. As I mentioned before, the maximum amount of risk to reward that our trades go to is a 1 to 6.5 risk to reward ratio. It is going to be up to you to take profits when you decide you want to take profits, whether if it's at 1-to-1 risk to reward, TP1, or if it's at 1-to-5 risk to reward, TP5. That is going to be up to you. Or if you want to take partial profits, that is going to be all up to you. We will give our personal recommendations, but ultimately it is you that is pressing the button. So when we do this 10 trade average for a 1-to-1 risk to reward, as long as you have a 70%, as long as you are profitable 70% of the time, you are going to be 4% profitable after 10 trades. If you're below 50%, then you're not going to be profitable. We will leave that up to you guys to decide what our win percentage is, right? If you don't, I'm just going to leave it at that. We know that we're profitable, but we're going to let you guys figure that out, right? So this is a 10 trade average for a 1-to-2 risk to reward, right? If you were trading everything that you were looking for and you're like, okay, I want to be at a 1-to-2 risk to reward, you could be a 40%, you can win 40% of the time and still be profitable after 10 trades, when you go and reach for a 1-to-2 risk to reward. When you go for a 1-to-3 risk to reward, then it is possible for you can even be a 30% winner and still be 2% profitable after 10 trades, right? Let alone if you're an 80% winner, then you're up 22% after 10 trades. So it's so funny how risk to reward matters. And that's why I said we use low risk for that high reward, and of course, guys, if you are still here, we appreciate you guys. Drop that subscribe, because we know that if you guys are still here, that you've gained some value from this video. drop that subscribe, drop a like, drop a comment if you do really feel good about this video and you're ready to make some money with us, right? Not financial advice. And of course, a 10 trade average, 1 to 4 risk to reward, that's going to put you there's, even if you're a 30, I'm pretty sure even if you're a 20% winner, you're still going to be profitable if you're taking trades at a 1 to 4 risk to reward from us, right? 1 to 5 is just, now you're just like, okay, even if you're a 10% trader, you still could be profitable. So these are things that you guys are going to be witnessing from us. You guys are going to be seeing a lot of good trades. We're going to be telling you guys when to take profits hit. We're going to be making sure that you guys are going to have some quality trade ideas. The charts will be available as long as we are able to provide the charts to you. And I hope you guys have enjoyed this video. Thank you so much for tuning in. And for those who have subscribed, thank you and welcome to the next wave. Thank you for joining our tribe. We are here to change the game because the game needs changing, and we are the cashiers, literally. Later, y'all.